April 21st, 2025, a quiet weekday morning on the NASDAQ. With no major earnings reports or macroeconomic data on the calendar, the market opened calmly. But within minutes, one unfamiliar stock began surging. That stock was MicroCloud Hologram, a company headquartered in Shenzhen, China. In a matter of moments, its trading volume exploded, and the share price spiked several fold, dominating the top of the trading board. Yet something was off. There had been no news that day regarding this company. No press releases, no analyst reports, no filings with the U.S. Securities and Exchange Commission. Even the company's official website showed no updates. Then, right after market close, MicroCloud Hologram published a single SEC filing. The message was simple: a 1-for-40 reverse stock split. A reverse split is typically executed when a company's share price drops so low that it risks delisting from the exchange. By combining shares, the price per share increases mechanically, a purely cosmetic measure unrelated to actual business value. It's generally viewed as a red flag rather than a positive signal. But here was the real mystery. MicroCloud Hologram stock had already surged before the announcement. In a normal market, news triggers price action. But in this case, the market had moved in anticipation of the news, suggesting potential information leakage or asymmetric access to material information. More concerning still, this was not an isolated event. In just 2 years, the company had conducted 3 reverse splits: a 1-for-10 in February 2024, a 1-for-20 in October 2024, and this 1-for-40 in April 2025. Most public companies conduct a reverse split at most once during a prolonged downturn. Repeating it 3 times in 2 years is extremely rare and signals deeper structural concerns. Even more troubling is that on each occasion, the stock price surged before the filing, a pattern that defies coincidence. We then need to ask, what does this company actually do? Originally, MicroCloud Hologram described itself as a developer of holographic visual technologies, including AI-based computer vision, LiDAR sensors, and real-time imaging platforms. But between March and May of 2024, the company rapidly established multiple subsidiaries in mainland China and acquired firms in the online advertising sector, effectively pivoting its business model. According to the 2024 annual report filed with the SEC, the company generated roughly $41 million in revenue that year. Of that, $39 million came from services, while only $8 million came from product sales. A dramatic shift from hardware and tech IP to service-based, ad-driven revenue. This pivot is highly unorthodox for a company that originally positioned itself as a deep tech firm.